Hello everyone, we're here with Pravin Padalkar, a new author of Jaico that has written this book, and we're really excited for the conversation that's going to happen and looking for you to tune in and let's go. So, hello sir, welcome to the podcast.
Thanks, Clinton, and thanks, Jaico, for authoring my book. It's a great privilege to be here. Thank you very much.
I think it's a privilege for us to
Yeah.
be able to author your work because I personally got an early chance to go through your book and
Nice.
yes, and it was really insightful. So someone who is 27, this was really helpful
Oh.
for me as well personally.
Thanks a lot, Clinton.
Yes. To begin, I just wanted to speak about the title first. Of course, the title is very intriguing. The Art of War for Stock Market Investors.
True.
So how did you come about this title and anything that you can say about that?
Yeah, the title comes from my background, basically, right? As you are aware, I have served with Indian Air Force for 22 years, and that's a long period. And we have been trained, done exercises, waged wars. So military strategy, war waging is one of the essential factor. And after opting for voluntary retirement, when I have started this passion and take it forward, then slowly over a period of time, I realized, there is a lot of correlation between war and stock market. And that's why the book title has come. To take it forward, when the people ask, war and stock market, how does they go together hand in hand? But there are a lot of things which are related. And most importantly, the thing is that as of now, unfortunately, when we are sitting here, US, Israel, Iran are loggerheads. The conflict is going on, and this is the biggest correlation. The most important correlation between war and stock market is the uncertainty. There is a Perusian commander, Karl von Clausewitz. He has a profound quote about war. He said, war is the realm of uncertainty. 3/4 of the facts are unknown and still we are waging, and the same goes with stock market as well. And that's why I have drawn into this and the correlation between war as well as stock market. I think this book will give a very good perspective to all the investors who want to invest into stock market, how we can adopt, employ war strategies, war plans into stock market investment. And that's the crux of it actually.
Great, because I just knowing about the similarities between war and the stock market, like you mentioned, and how most of the factors is something that we don't know. But in that case, wouldn't waging war be pretty irrational in your opinion?
See, it's not irrational. Irrational would not be the correct word. I said uncertainty. Like, for example, again, if I have to correlate what is happening in Middle East, right? Iran, US, Israel. The top general commander sitting there, they don't know what is going to happen tomorrow.
Yes.
Where the Iran is going to hit missiles, nobody is aware. What US would do, nobody is known. So everything is uncertain, and in our jargon, if I may say, in our military terminology strategy, we call this fog of war. That means everything is uncertain. In stock market also, like I have so many clients who are in your same age bracket, 20 to 40. When there is a war, I get calls. Arey, Paddy, what to do with this? The Nifty is going down, the Nifty is going up. So they are edgy, they are jittery. Whatever is happening on the global front is directly correlated and transpiring into this also. So there is uncertainty into stock market also. Now this book will reveal how we should play the game. This is the game of uncertainty. It is basically estimating probability. And war is also like that.
And specifically, I think this is the right time for this book to come out.
Yes.
I mean, unfortunately, there are wars going on.
True.
But it also is the very right time. And you, someone with the expertise of the best of both worlds, one would say, you have the best of both worlds kind of experience in this realm. So I know it's hard to pick, but if you could name one strategy specifically that stands out for you that you think is a direct correlation to the stock market, some war strategy.
I would say investing is decision making under uncertainty. That's what is investing. Investing is nothing else. In war, whatever we have been trained over a period of time, there are various situations during exercises, Kargil war, where you have to take decisions when nothing is known. that decision making is very, very important. So one corollary, one aspect which we have to draw, or I draw every day, is I'm able to make decisions within that uncertainty, within that framework. That is very essential.
And for somebody who has expertise in both of these realms, stock market as well as in the Indian Air Force, I would like to ask you specifically, how do you see this war impacting the stock market?
Actually, see, if I have to say, you would recollect, this is not the first war actually, right? Ukraine-Russia war started almost 4 years ago. The uncertainty was there that time also. The war is still not resolved. The conflict is still going on. The Nifty has reached almost 26,200 in September 2024, even during that uncertainty. But now it has corrected over a period of time. So the stock market digests everything. Whatever geopolitical situation would be there, right? Today it is, there may be a Trump tariff war, right? Geopolitical instance, maybe financial crisis of 2008 and anything, COVID, right? Let there be any uncertainty, but stock market will move at its own pace and will always take over a period of time. But the uncertainty would definitely impact investor in the short duration. They would be jittery. And that's what the actually books talk about. It's not about strategy. It's about behavioral finance. How you behave with your own money, how you think, how you feel, what are your emotions when you are investing. And when this is time of uncertainty, the emotions rise, they change. And because of your change in emotions, change in feeling, change in behavior, your investment also goes up and down. The beauty of investment is you have to be equanimous, as we say in meditation. Stay there. Irrespective of any chaos, you have to be calm. And if one understand meditation, he will able to do well. So there are two worlds, again I am correlating. One is the meditation, the another is war. War teaches you to behave in uncertainty. Meditation teaches you how to behave in any situation of life. So if you apply these, you will definitely come winner in this stock market as well.
Yes, I do think that you're very right about the values and principles that you can pick up from daily life as well into the stock market. But one word that is very, very synergistic amongst most people that are new in the stock market is fear.
Yes.
So how do you see people usually with your clients or people that you've met in terms of uncertainty? What is the typical reaction and what shouldn't it be?
Yeah, I will tell you the investing cycle. There is a full chapter on this about investing cycle, right? Let me take 5 minutes to brief on that. That's a very interesting aspect and topic of stock market. I'll come to fear within that, right? The investing cycle, like the investing cycle or investment starts with bull phase, goes up, market will go up in bull phase. In bear phase, it will go down. It's a sine curve, right? So the investing cycle starts with hope, expectation. For example, let's say there is a youngster who has just joined a company and started earning. He feels surrounding him that, oh, my colleagues are investing into stock market. He's saying, I have earned so much. And there is a noise, there's TV, there is newspaper. Everybody around is talking about stock market. He feels, oh, this is the arena where I can earn crores of rupees. He feels hopeful, he feels excited. And then he starts investing on his own without any knowledge, without any information, without doing any research, just because of tips. So that is the starting. There's a hope, there is excitement. And the first trade is always lucky, as it is. As soon as he invests, the stock market starts going up. So let us say he has invested 1 lakh rupees, he earns 1.5 lakh rupees, he feels skilled. However, that is not skill, it's a luck. But he thinks it's a skill. And then the overconfidence grows. And then stock market also aligns that way, it goes up again. Then that hope turns into excitement. The excitement turns into thrill. Then thrill turns into euphoria. And euphoria is the peak point of the bull. And then at that euphoria, go anywhere, everybody is talking about stock market. Even your pan shop wala babu is also giving you tips, saab ye stock le lo, no ye chalega. And that time is the time when you should book profit and get out. But this chap who is a youngster, he don't know. He gets carried away and puts more money at that peak. And he buys more at that peak. And as soon as he put, let us say, 10 lakh rupees at the peak, the stock market changes its nature. The bear phase starts. 10 lakh becomes 7.5 lakh. Then there is a denial. What should I do? Then after that, there is a fear because the 10 lakh has become 5. Then you don't know what to do. Then that fear gets into panic. And then there is a pessimism, that point of maximum pessimism when you are down on the bear cycle. That is the time actually you should be putting more money while this guy sells his entire portfolio in loss and get out of it. And as soon as he gets out of it, the stock market again changes its color. It slowly moves up. Again, he feels there is hope. He feels there is excitement, and the cycle starts continuing. So there are two aspects, as you said, in the stock market which drive the stock market. One is the fear and other is the greed. And if you can control your fear and greed, I'm sure you will never lose money in stock market. And that's what this book talks about.
Right, because I see a lot of people, first of all, the concept of life cycle of an investor is amazing. The way you've put it is very, very insightful, and we see a lot of investors and a lot of people on their investing journey finding themselves making the wrong decisions at exactly the wrong spots. Like you said, at the top where you're supposed to book profit, you usually end up buying more,
again,
which creates problems in the eventuality. But when it comes to this, why do you think, even after there being so much of literature, so much of information out there about stock market, with someone like you are very active on LinkedIn, you write a lot of blogs and you write a lot of information out. Why do you think people still continue to make those mistakes? Is it that the emotion takes over, or what exactly happens?
See, the best part is our behavior have not changed 2,500 years ago. It will never change in 2050 also. Irrespective of whatever I write, whatever I do, the human being will always be fearful. The human being will always be greedy. And that's what differentiates between a true investor and a trader, right? If you are not in a position to understand the nuances of stock market, then it's better you seek services of some advisor that will help you. But if you start thinking that you will control stock market and do it, it would be very difficult. And as you said, the only aspect, as repeatedly I am saying, is not how the financials, how the balance sheet works, how profit and margin works. It's only about behavior, individual behavior. Your mindset will only allow you to win or lose. And if you can control your mindset during these periods of uncertainty, you will definitely sail through. Nobody can stop you. But again, not very are ready for that stage.
Yes.
And that's you have to inculcate over a period of time. It's, as you said, there is a lot of information. Yeah, we are into the social media kind of a world. Every day there are thousands of information coming, but information is not knowledge. And knowledge is not about wisdom, right? So you need to move from information to wisdom. And the arc goes very, very harsh way. You have to lose your hard-earned money to do that. You have to pay to the stock market.
Yes.
Then only you will learn that.
Yeah. Because I've heard a lot of people speak about stock market as once they burn their fingers, is what the metaphor they use, that they never usually invest again. And to tell you something that is very personal to me as well, even someone from the older generation like my parents have usually tend to invest in stocks without knowing what they're investing in.
Correct.
And then there's this fear that once you see a loss, and then you never want to go and then it's passed on to the future generation saying that it's gambling, don't do anything about that.
That's why precisely this book is all about. This book is not telling you where to invest.
Yes.
This book is not telling you where to trade. This book will change how you think about stock market. This book will tell you how you can apply war strategies into investing. And I will just quote you, 2,500 years ago, there was a Chinese warrior known as Sun Tzu. Sun Tzu said in his one of the profound quote, which is quoted in the book also, victorious warriors win first and then go to war. So if you have to win any war, let it be a critical actual war on battlefield or stock market, you have to win here in mind. You have to balance your mind, you have to control your mind, you have to have control on your feelings, emotions, then only you will win. And that is the precise reason why I call stock market as an invisible battlefield.
Right.
It's an invisible battlefield because millions of people are affected every day. Not seen, but everybody is affected. You, me, and all guys, right? And that's the crux of the thing.
Wow. And speaking about the mindset versus knowing what to do, the knowledge versus mindset, if I were to ask you how you would divide of how much importance does mindset play versus if it is an 80-20 or is it a 50-50 mindset versus knowledge?
Yeah, correct. So there is one more concept in the book which I have written. Skill is not strength, right? Strategy is strength. So mindset would play 70% of the thing in my opinion, and 30% is what is your financial knowledge. Doesn't mean that you choose any stock, right? When I let us say select mutual funds or stock, I do a lot of research. That is the first stage of it. That is the only selecting. Like Clinton want to buy X company, let us say. He will do all the research. Like I do all the research around. I spend weeks together in researching that company, whether I should invest into this stock or not.
Right.
Then at what price? There are so many parameters. But once you have gone into that, once you have put your money into that, the game starts there only. So the 30% is only selection, rational, logic, research. 70% is that cycle. And if you can manage, because already let us say I have invested 10 lakh rupees in one stock now. Research is done. Now what research I am going to do after that?
Nothing.
After that, it is all at the mercy of the stock market. It will take my price up, it will take my price down. And when you invest into stock market, equity, I am talking about equity, not mutual fund. Just for example, anyone who is invested into equity, he should be ready that his stock can fall by 50% any time and he should be at peace with that. Then only you are mentally prepared to invest into stock market. Otherwise, you should stay away or follow the mutual fund route.
Right.
So to cut the story short, 70 is your mind, behavior. 30 is your knowledge, research. But does that mean that 30 is not required? Yes, 30 is required. That is the first step. That is the foundation. But if you have to win, your behavior will make you victorious. That's the idea.
Yeah. And I see a lot of people checking their portfolio every single day. You know, they believe that they check it every single day, and based on how the stock market performs that day, basically dictates how their day is going to go. Like if it's in red, their mood is spoiled the whole day. If it's in green, they're happy the whole day. So what would you say to people like these that keep checking their portfolio all the time and are worried the whole time?
Yeah. So this, I would take you one step backwards and address this question, right? So you're a young, dynamic marathon runner, 27 years, smart guy. You represent the entire India as far as young investors are concerned, right? Many of the young investors, you know, they have mobiles and there are apps. This is the dangerous thing which has been innovated as far as the investment is concerned. Because I talk to many investors and most of them, if not many, are into future and options and trading and crypto. And this is not investing, this is gambling. They do not know. Many want to double their money yesterday, not even tomorrow. So there is a greed. Everybody is interested in making quick bucks as early as possible, and they think future and options, crypto will make them rich in one night. And that's not going to happen. That will never happen. It has never happened with anyone, even with Rakesh Jhunjhunwala also, right? And that is the reason why people see their portfolio daily, because trading makes you more active and you feel to be active is a greater aspect of life, but that is not actually. True investing is all about patience and long-term compounding. So whenever there are investors, my clients, or I meet youngsters like you, I always discourage them. If you have a portfolio of mutual fund, let us say, you need not see that mutual fund portfolio for even 6 or 1 year. But if you have a equity portfolio, maybe 3 months down the line, or maybe 1 month down the line is okay. But seeing daily, it is because of that availability of information with actually access to the information easily. That's why, and it is the dangerous things to do that actually. One should avoid looking at that portfolio. And when will one avoid that? The person will avoid looking at that portfolio only when he reaches to the stage of wisdom.
Right.
Information, he will be drawn into the social media. That's the aspect. Like for me, for example, I do not look at my mutual fund portfolio for 6 months or even year. But yes, as far as the equity portfolio is there, I review it monthly. Because you have to find out which stock is doing what. Like quarterly, you can say. Every quarter there are the quarterly results out, and then you review, analyze, and then take a decision accordingly. Maybe once a quarter is good enough.
But I think the specific difference between you looking at the portfolio and the person looking at the portfolio are very different. I think you would usually look at a systematic, like every 3 months I have to look at it. They are just looking at it out of curiosity. कि क्या हुआ है, ऊपर गया है, नीचे गया है.
It's not curiosity, it is basically thrill and excitement.
Yes.
Looking at my 10 lakh rupees, मेरा किधर गया?
Right.
What happened to my 10 lakh? He wants just excitement out of it. He has not moved from that stage. The idea to read this book is that take you from the level of information to wisdom. And wisdom comes जब तुम्हारे बाल सफेद होते हैं. It comes over a period of experience.
Right.
Like I have been into stock market almost now 30 years. I have served with Indian Air Force almost for 22 years, right? It's ages. It's not that I have made mistakes, but I have not made blunders, right? I made mistakes, I learned from them, improving every day. Like stock market is a learning, right? Every day I learn something new and it gives me new, right? That's the thing. So youngsters should learn that. Try to avoid future and options completely as much as possible, right? SEBI has also almost said already, there is a white paper which says that 91% traders in FNO make losses. Still people do not believe in SEBI also. They want to just do trading and try to double money in one day, which is not possible.
I think it's a very bad trend because early on, I personally never tried trading because I always knew that to me it was too complicated, too many variables that I thought to myself that, or I think anyone in my age bracket would have thought that I'll have to sit in front of a computer full time and be able to track the trade and things like that. For me, I was more laid back. I was like, I want to see the principles of this stock or see if I like this business, I think this business will make money. I would just put and sit back and then not check for a long time.
Correct. That's the correct way.
Yeah, that's usually helped me. But you, sir, have researched a lot, of course, for this book and for over the time of your career as well as an investor. So what I want to know is, since you have seen a lot of investors grow, like Warren Buffett, Charlie Munger, and other investors, famous ones that we know, including Rakesh Jhunjhunwala, the late Rakesh Jhunjhunwala, sir. What are the key pillars or principles that you've seen in them that they display, that like values that these great investors have, that you would say?
Yeah, a nice question actually. Again, we move from that skill set to behavior aspect of it. Everybody is knowledgeable at that stage, right? And everybody has that behavior. Everybody has that emotional control. If you talk about, let's say, Warren Buffett, patience. He sincerely talks only about long-term investing and compounding. That's all. His only thing is compounding. He is a patience. Rakesh Jhunjhunwala, when it comes to Rakesh Jhunjhunwala, his trait is flexibility, adaptability, as fast as possible. Anything that is changing, he will accept, move along, tag along, and adapt the situation accordingly, and then move forward. And his another important trait is vision. When nobody was even contemplating India would move that forward, last 20 years down the line, he said that India is going to be the next horsepower of economy. That was the vision. So Rakesh Jhunjhunwala separates from everyone as far as the vision is concerned. And Radhakrishna Dimani is for his simplicity, right? For his uncanny ability to pick businesses like a DMart, Avenue Supermart, the way he is driving that, right? You go to any DMart and there's a lot of crowd there, right? So these are the traits, and every individual has different traits. Like Charlie Munger, if you have to talk about, his thing is lattice work. Lattice work means he connect the dots. He says, not only stock market, he says stock market means history, stock market is mathematics, stock market is psychology, stock market is physics. And he connects the dot around. And all these guys, like I read a lot about Munger and Warren Buffett. These are voracious readers. They keep on reading, and then built knowledge over a period of time. And that's why they have evolved over a period of time as best investors for the century, you can say.
Yes. Now, sir, on that note, I want to give you a very small challenge, let's say. So let's say you have an investor, or let's say a robot investor, that you have to inculcate values in. What are the top 3 things out of all these values that you mentioned that you would rank the most important and you had to put into that ideal investor that you create?
Ranking 3 would be difficult actually, right? Because behavior is a bouquet of things. Okay. You can't say that I will be patient, but at the same time I would be fearful also.
Right.
So it's a personality.
Yes.
So I need to build the entire personality of Clinton and mold it into a Pravin kind of a thing.
Correct. Right.
What I have learned over a period of time. Right. So few aspects which are very, very essential. Number 1, control over fear, control over greed, have patience. Like what you said, no portfolio seeing every day, no. When you invest into stock market, you should be investing at least for 5 years, if not 20. But the wait has to be for 20, right? So patience, resilience, flexibility, and ability to not do anything and sit calm.
Yes.
That is very important. So these are the traits which I would see would take them to a higher level. Very, very essential.
Yes. Because the specific trait that you mentioned, patience, that uncannily you ranked at the top, right? Unknowingly also.
Yes.
Because I think that's the easiest to understand, but the hardest
to actually implement. True, very true. That is the thing. Why? Because see, when I was also young, right, I was also restless. Yes. Right? Everybody goes through that cycle, and everybody learns, unfortunately, at later stage of life. However, I will tell that youngster, कि भाई ये मत कर, वो करेगा ही करेगा. But my job is to tell him, guide him correctly, and the earlier they learn, better for them. You will imagine the compounding is such a thing. If, like you said, you are 27, like that means you are 33 years of runway ahead, right? So by the time you retire, 33, or even earlier, if you want to become financially independent at the age of 50, you can easily build a corpus of 5 crore rupees. Nobody can stop you, and that too without losing peace of mind. Just sit calm, compose, enjoy your running marathon, do everything what you want to do, love to do, and let your money grow, it will grow. But nobody allows their money to grow. They will interfere in between. Right. That's the challenge.
Yeah, the real challenge is avoiding blunders, like you said.
And the challenge is doing unnecessarily, हम बोलते हैं ना उसमें something unnecessarily fingering doing here and there. And when you see the stock has gone, let us say 100%, sell that stock.
Right.
Have patience to allow that stock to multiply by 10 times. What is hurry? If it is double, that you should sell it.
Yes.
Or if the mutual fund has double or triple, you should sell it.
Right.
Hold on. Yeah. But nobody holds on. That's the problem.
That makes sense. And speaking about youth, like you said, early on you have a defense background. So I want to know your journey from defense to stock market. What got you into the stock market? How did you find it? And because it's very varied when it comes to your education as an engineer.
Correct.
Then going into defense, then into stock market. So it's a very interesting journey. Could you take us through that?
See, while I was in last year of engineering college, then there was a huge newspaper article. Harshad Mehta offering 1 crore back to showing to the media, so-called Prime Minister. He said he claimed so. And that was the turning point as far as I am concerned. That was a big news at that time in 1992. So I didn't knew what stock market is all about. I was not aware at that age. I was just maybe 20 in a final year of engineering college. Then I started curiously finding out what is the stock market all about. How does people make or lose so much of money? Then I read. And then after my engineering, I joined Indian Air Force. There was no time into that. Like we were a very busy, hectic schedule. Then I started investing at the age of almost 25, right? Then through mutual fund route. And there was no app, there was no internet. You have to go to the broker, fill the form, give the form to him, and start investing into mutual fund. Over a period of time, then I started loving stock market, not because it gives me opportunity to make money, but because of the curiosity of it. Why the business is running, what is stock market, how so many businesses are being run, how is the economy is developing, where are we in terms of that? Like Mangar said, connecting the dots. So it is out of curiosity, I got drawn into it. And then it engulfed him, kind of a thing. No, now I am fully immersed into that. Then by the time I reached around 45 years, I was financially independent. And I thought, let me follow my passion. And that because of this financial freedom, because of I wanted to live my life on my own terms, kind of a thing, I opted for voluntary retirement from Air Force, and then started stock market investment as a full-time career, kind of a thing. And then formed my own firm, Defensive Investments, where we guide young investors like you to lead a path towards financial freedom. So the journey is actually started from a scam, and then it drove me towards curiosity, and finally I fell in love with stock market, you can say. Now every day is enjoyment,
right?
But not out of money. Money will come, money will always be a byproduct. But as I said, now for example, coming back to now today, US, Iran, Israel, what is happening, we don't know. Tomorrow market will collapse or go up, nobody knows. And that's what is curiosity. The Strait of Hormuz would be blocked or not, would it open or not, how much oil we are going to get, we will get or not, where will we get the oil, Russia will give or not, Trump will, how much tariff he will going to impose on me. There's so much of chaos.
Right.
But within that uncertainty, it gives us opportunity to learn. Otherwise, I would not have known everything.
Right.
So that's the journey in short, if I have to say.
Yeah, that's a brilliant journey actually. And also the fact that you mentioned within uncertainty is where you learn the most.
Correct.
And it's a very similar thing in not just in the stock market, but in war as well.
Yes, true.
It's in these uncertain situations that people have the greatest experiences that they come back and tell us.
Correct.
From the armed forces and people involved in war. But I wanted to know specifically, for when it comes to financial independence, if there is somebody who is just starting out in their career, you said you achieved financial independence at the age of 45, which is a dream for most people right now that have just started out their career. Do you think in this time, in this economy, while all of everything is uncertain, do you think it's realistic for us to still expect that, if it's possible?
Yeah, definitely it is possible. But the thing is that as early as you can start, it is always better. So I advise youngsters that whenever you hit the first paycheck, maybe at the age of 21, 23 or 25, you should start investing immediately. And then think long term again. Right. So even the person is about 27 or 30, he would definitely become financially independent. But the runway, the time horizon has to be a little longer than.
Right.
Not 45, but maybe 50.
Yes.
He will able to achieve. But also your objectives, your goals has to be very, very clear. Like I was very, very sure that I have to have my financial independence as early as possible, because I wanted to lead my life on my own terms and do what I love to do. You can do what you love to do only when your finances are strong.
Yes.
Had I no money, I couldn't dare to do anything, right? I have a family to look after, right? And for everyone else. So your goal has to be clear. Like if somebody wants that, so financially, to achieve financial independence is one of the, in my opinion, one of the most important goal in everybody's life should be. That's my opinion. And the late you start investing, you would able to achieve a little later.
Yes.
That's the thing.
Now, coming to very specific recommendations from you, since you're someone who has spent around, you said, 30 years in the stock market. What I want to know is, if someone in their 20s just wants to begin investing or even learning about investing, where should they start?
Learning means, you have to read books. That is number one, right? There is a social media, a lot of YouTubers are there, but then you should know what is signal and what is noise. You have to decipher a signal from noise, actually. That is very important. Then you should introspect yourself and try to find out whether you have capability to do it on your own or not. Capability in terms of intellectual ability to decipher all the financial statements, take your own decision, behavioral control. If not, then you seek services of some advisor and let him do on behalf of you. That is better, I think, in my opinion.
And not leaving people that have just started saving behind. Do you have any kind of mantra or any kind of formula for somebody who has just started saving? How much percentage of their paycheck should they save, or how much is good enough?
I would say 100%, but that's not practically feasible. And there is no percentage, actually, frankly speaking, because individual journey is totally different. Let us say now, I know you have parents with you. Let us say somebody else is there who has to give money to their parents because they are dependent on him.
Yes.
And he would not able to invest, right? But in my opinion, the thing is like that. Let us say your take-home salary is around 1 lakh rupees, right? So 50,000, so you must invest.
Okay.
Start with 50%. But if somebody has a liability, then he has to give money. At least start with 10, 20. And slowly, when your liabilities are not there, increase it.
Yes.
But at any given point of time, it should not be less than 50%.
Okay. So 50%, at a 50%, when the person keeps investing, then they can, hopefully with the right guidance, can achieve financial freedom eventually.
Yeah. But again, that 50% means how much?
Right.
Quantifiably how much? 1 lakh can also be 50%. 30,000 can also be 50%.
Right.
And the cost of financial freedom is also important. How much?
Yes.
What?
Yes.
Like today, if I have to quantify, agar bande ke paas 5 crore rupees are there, then I can say he can survive. At the age of 60, if he have 5 CR almost, he's okay. He can sail through. So you see, that's why there is a concept called as financial planning, asset allocation, diversification. You need to talk to your advisor, seek his advice, sit with him. Then he will chalk down a financial planning. What are your goals? And he will tell you how much to invest and where you can reach. Will you able to achieve all your goals or not? It's all about as in war we say, selection and maintenance of aim.
Right.
Corollary to investment is you must know first what are your objective and goals in life.
Yes.
And stick to those goals. Maintenance of aim means stick to those goals over a period of time.
Right.
Do not change goalposts because somebody else is changing. Then you will not able to achieve anything in life. Forget about financial independence.
Yeah, specifically on that, I was very curious to ask you this. How important is the goal? For example, I've heard a lot of people talk about, I need 2 CR, I need to get to 2 crore, and then I'll be happy. And then they say, I get to 3 crore, then I'll be happy. Few years down the line, they're like 10 crore, then I'll be happy. So this greed that we have inherently as humans doesn't really stop. So how important is it to have that number and stick to it?
No, number you are talking different now. This is not the number. You are trying to quantify happiness in terms of numerics.
Yes.
Happiness doesn't depend on the money, actually speaking. You can be happy as it is. Contentment is happiness. But what you're talking in other sense is the financial goals. Financial goals, like for example, one is the retirement planning, right? That is one financial goal. Children education, that is second important financial goal. And third is construction of your own house.
Right.
That is the third financial goal. Then somebody wants to do he want to see the entire world, go on foreign trips every year, then that can also be a fourth goal. So you have to quantify, write down those goals. That is where it boils down. It doesn't say कि 2 crore चाहिए 5 crore चाहिए. That is not. What is your financial goal? My goal or financial goal can be entirely different than yours.
Yes.
And then the number will also vary depending on your age, depending on your requirements, right?
Yes.
So that's what is goal planning is very, very essential.
Yeah. And also for someone in their 20s, as I asked you, for someone starting out, you definitely gave a good recommendation, but not leaving the people behind who have just entered their 30s or their mid to late 30s. And usually I've heard them say, is it too late to invest? So what would you say about that?
There's nothing late actually, no. Jab jago tab savera, what we say, no? There's nothing late. So there is no, one should not be regretful about. Start to karo.
Yes.
You should start someday, no? Then only you will reach somewhere.
Yeah.
That means if you want for retirement planning, let us say you wanted 5 CR. You started at 30, you don't have that large income to invest more. If not 5 CR, you will reach 2 CR.
Yes.
But even if you did not start, then you will land up in 50 or 1 CR.
Right.
So better to start early as possible.
Yes. So now I just want to ask you, what's the most surprising, and if you could tell our audience this, surprising behavioral bias that you see for the people in their 20s and 30s that they have?
That's we have spoken, right? The surprising behavior, I won't say 2030 because I know I respect these guys. They are much more wiser than me, much more intelligent than me. I do not want to segregate that age. But generally, when I look at most of the people around, the one factor is greed. Everyone is, many, if not everyone, sorry for that, many, as you asked, what is the surprising behavior? And most of the people, what I observe is greediness for the money. That is very, very essential. What I see is very, very needs to improve on that. I would say needs to improve on that.
So I wonder, sir, from the time you got in the stock market, let's say 30 years ago, like you mentioned, so was there any specific inflection point where you saw the greed or this get rich quick schemes become more popular? Was there a specific trend that it started and you were like, oh, okay, and now you saw it over the years that this has gotten really bad?
Yes, definitely. That's a good question actually. This greed peaked post-COVID. And you will recollect suddenly the number of demat accounts increased by multifold. During COVID, people have a lot of free time. Everybody is working from home, doing nothing, and there was YouTube and everything, all social media. So they started seeing financial things and all, learning on their own, thinking that they can do. And while working from home, they were also trading. And this future and option trading started from that place. And that was the peak euphoria where it has started and then reached there, 24. And since 24, the market is nowhere. It is on the same stage. Right. Plus minus 5-10% here and there, that's all. So that was the peak moment where even SEBI has to butt in and say, bhai, calm down, you're doing extreme. That was the euphoria actually.
Yeah. And I think that aligns very well with your life cycle concept. Would you say that 2020 to 2023 or 2024, until the market was just going up, was the optimistic period where people were thinking that I can just put any amount of money,
yes,
it's just going to grow?
Definitely. That was the huge thing which I saw.
Yes. So how do you personally, when there's an uncertainty in the market, like a war or something like that, now I understand that you've been in the stock market for a long time, so now you have matured enough to be able to not touch your investments where there is something haphazard happening based on your emotions at least. But back in the day, have you had any specific experience where it got you really worked up when the stock market went down and you had an experience where you just sold off something and you felt really regretted afterwards probably?
Well, that means you want to ask me what mistake I have made, right? Yes, that is the correct way of putting it across. Yeah. But in that sense, what are you say? Not because of uncertainty, because uncertainty doesn't bother me because I have come over that over a period of time by virtue of my training and meditation and everything. But one mistake which still hurts me is that post-COVID mistake. COVID, the market went down 2020 March. I knew it has gone down. I knew what I have to buy. I had money. I bought. I bought at the correct level. I bought huge. I bought huge. Market went 2020 March to 2021. It made my money doubled, and I sold off early. I sold off early. That is my, one can say, biggest mistake. I could not have, should not have. I sold off, thinking that business would not grow more. And that's what is decision making actually, in stock market, because businesses are also very uncertain. You can't say which business will grow, at what rate it will grow, after 5 years where it would be. I thought so. I trimmed that position. So that's one thing which still I feel, I would have continued. So now I hope I will not make that mistake again.
Yeah, hopefully. But that kind of shows us, because everybody just talks about the greatest hits. No one really talks about, I made a mistake even after being in the stock market for, at that point, it must be around 24, 25 years in the stock market. And we can still make mistakes, but it's better that we learn from it.
Yes, mistake. Right. I would, tomorrow also I will make mistake, I'm sure. But the thing is that you don't repeat the same mistake.
Right.
That's the thing. And make mistake, don't make blunder.
Yeah.
That's what I said. Defend your capital. Otherwise, you will lose this game.
Yes.
Every game is about defending, protecting, managing your risk. If you can manage your risk, at least you are alive to wage that next day war.
Right.
Otherwise, you will not. You have to survive. Right. Sustainability is very important.
So, when it comes to sustainability, if you had to just explain that specific principle from the book that you've mentioned about sustainability to our audience in a few words, if you could tell them exactly what did you mean by being able to sustain such that you fight tomorrow's war.
Yes, sustainability means in terms of war, that is one of the principle of war, sustainability. Like for example, now let us draw this correlation between let us say Israel, Ukraine and Russia, right? Now what is Ukraine is doing? Russia has a lot of enormous you can say weaponry, assets, military assets, financial assets compared to Ukraine. Nobody thought Ukraine will sustain that war. Now we are into 4th year. Yes. That is sustainability. That is they are still there. They are still fighting. Nobody knows. Nobody able to now finish that war till date. That is sustainability. And sustainability comes not only out of what assets you hold, how much powerful you are, it also comes with the mind, mind power of Ukrainian people, how the leadership is motivating them to wage this war. Waging a war continuously for 4 years is not a joke.
Yes.
Not a joke. So that's what sustainability is all about. Sustainability means survival. Survival is survival of the fittest, but that comes with strategy.
Yes.
It doesn't always come with strength. You may have strength, but you may not able to sustain. Like Shivaji Maharaj, like sustainability. He sustained in front of Aurangzeb, in front of all the Mughals. He sustained over a period of time with handful of guys. Right? He didn't have much forge. He didn't have much resources. He didn't have much arm, but still. That's guerrilla warfare, which we call it. Guerrilla warfare is sustainability. Same correlation if you have to draw with like stock market. Let's say if you have 10 lakh rupees to invest, if you are investing that entire sum into stocks, then you are the most foolish person in the entire world. Because that 10 lakh can easily become 5 lakh tomorrow and you have nothing tomorrow to eat.
Yes.
So again, coming to the same point, sustainability in terms of stock market means protecting your hard-earned money, protecting your capital, so that even if you lose something here and there, tomorrow you have some money to invest and then rise again, win again.
Yeah. And when it comes to this example specifically about the Russia-Ukraine war, how a lot of people predicted it would be over in a week.
Yes, definitely. And there was uncertainty in the market.
Yes.
People say it will finish. But unfortunately or fortunately, that didn't impact stock market much.
Yes.
Like for example, same thing, the uncertainty with Iran war. Everybody is saying, somebody says it would finish immediately, somebody says it would take 3-4 weeks.
Yes.
You read there is alternative narrative going on. It's all noise. Nobody knows. Actually, that is what I said. Just Clausewitz, what he says is perfectly fitting everywhere. Every war will be uncertain, and the same goes with stock market. We have to live with it.
Yeah, and that is very insightful, specifically because going back to your background in defense, I want to specifically ask you, because I was really curious about this as well, is in war, you've probably seen different kinds of warfare and strategy, and you're also very, very well read, like the earlier conversation that we was having. In that case, what are your favorite war strategy books or war books or even defense books that you've like?
No, see, there is Karl von Clausewitz, what I said, Perusian commander. He is a seminal book on war, old 1600th century. That is one. Art of War, Sun Tzu. That is, you can say, a Bible kind of a thing as far as war is concerned. Everybody reads that.
Yes.
So I read those books long ago, right? During my military, Air Force days and all, right? Now I predominantly read about businesses, management, psychology, risk. There is a very nice book which I have mentioned. By the way, in this book, there is an entire list of almost 50 books.
Wow.
So readers can take that, have a look. I call this the Weapons of Wisdom. That's the name of the chapter. So there are almost 20 books on war strategy, 25 books on business and investing kind of a thing. So there is a nice book about Against the Gods, written by Bastine. It talks about the risk as well as the history of the risk. And there is a book called Outlier. Then there is a book about Madness of Crowd. So it's a nice book. The entire list is there. I've read them all. I love to read. And that's how I pass my time.
Amazing, because I have never seen any book predominantly today that gives book recommendations apart from its own book, because it signifies to the reader, I think, don't just read my book, but get into the habit of reading. Right? And that's what we at Jaico love to promote as well, is that reading is the one habit that I think has exponential returns, right? As sir would say in the stock market language, it gives you asymmetrical returns.
Compounding.
Yeah, it would absolutely compound on everything. Besides that, sir, one final thing, if you could say to our audience, for someone who is just beginning, just looked at your cover through this podcast, discovered your book, and want to get to know more about the book. So how would you tell them exactly what this book is about in a short...
this entire podcast was about this book only, frankly speaking. So in short, if you have to say, how can you apply war strategies towards your investing? And since everybody is not a military person, and this book will help all these guys who are not aware how wars are waged, what is the military strategy and all. So what important is that if you follow the guidelines given in this book, how military strategies applied towards war, definitely the same thing can be applied to stock market as well. And you will, I'm sure you will come as a winner, victorious warriors.
All right, great. So guys, do get the book. The Art of War for Stock Market Investors is an amazing book that I got a chance to read hands-on, and I would recommend to everybody getting into the stock market or anybody that has been into the stock market. This is going to help every single one of you. So thank you so much, sir.
Thank you, Clinton.
It's very nice having you. And stay tuned until the next one.
Thank you.